What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at Bitcoin. And we're going to be thinking about Bitcoin in a different way than we normally do. Because what I see a pitfall that people commonly fall into is thinking about the price of Bitcoin in terms of what its all-time high was and what its all-time low was in any given market cycle. So for instance, back in 2018, if I asked you to name what the price was, the most common two prices people are going to mention right around 20K and all the way down to around 3K, all right? Because people remember where that market cycle peak and where the market cycle bottom was. But I think then for investors, especially for retail market investors, they start to then think of the price of Bitcoin in terms of what its all-time high was. And they sort of attribute that value to being the true value of the asset. And, because of narratives that get played out over and over and over again on YouTube and Twitter and Reddit, that, the price is going to X amount in X amount of time. And people sort of buy into that narrative and then buy into the other narratives, such as, the institutions are the ones holding the price down on purpose so that they can acquire more, et cetera, et cetera. So I think it creates this, a sort of unhealthy narrative around the asset, and people for that reason then develop unrealistic expectations for where the price can go. So what I want to do in this video today is I want to go over the price of Bitcoin and think about it in a different way and sort of show you how the price has progressed over time. And specifically, I want to look at the value of the asset from market cycle to market cycle in terms of its average price. Because when you think about the price in terms of, where was Bitcoin's price when it hit this market cycle peak, right? And we're looking all the way back to 2011 here, because we're kind of going to run through the entire history of Bitcoin. So back in 2011, we hit this all-time high price of right around $31. But what people would do now is then say, oh, well, the price got up to $30 and, that's our price target. That's where we're headed to, and we're heading way above that. When we look at that price, though, if we just look at a distribution of the prices of the asset during this time, all right? So we're just looking during this cycle. And, there's no perfect way to decide what is a market cycle, because ultimately you could say that, the market cycle is from peak to peak, or you could say from bottom to bottom, or you could pick some arbitrary moving average, like the 20-week moving average, and say when we're above that, we're in a bull market, and when we're below that, we're in a bear market. There's a million different ways to do it. So we had to pick a way to do it for this analysis. And I've just decided to use from bottom to bottom. So in any given market cycle, from the bottom prior to making an all-time high, and then the next bottom after making that all-time high. Okay. And we'll collect those price values and then say that is that market cycle. And that was the average price for that market cycle. This is a retrospective analysis. We can apply it to the market cycle that we're in right now, but we don't necessarily know where the bottom is. It may have been 17K, but we don't know yet. All right. So we're going to do a retrospective analysis of the price of Bitcoin in terms of its average price in order to show you the fact that the average price tends to be vastly below the all-time high price. And in fact, we're going to then look at percentiles, so the 25th, 50th, and 75th percentiles in terms of price of each market cycle, and show you why specifically buying in the setting of a bull market is a fool's errand, and it's ultimately going to lead to you being down a huge percentage as we transition from a bull run into the bear market. All right. As I'm sure many people at this point are acutely aware of, because, I think a lot of people tend to come in and they buy in during the bull market. All right. They buy in when the price is, hundreds of percent above whatever the average price for the market cycle is going to turn out to be. And that's how they get wrecked. And some of those people capitulate, they sell, they take a huge loss on their investment. And other people, they just bite the bullet and they hold on and hope that the price goes to a new all-time high in the next market cycle. And so far that's worked out for them if they've been in that situation. So, if you would have been someone buying in during this parabolic phase of the cycle, which many people are, as we saw again in this cycle, as we've seen in every cycle, a huge number of addresses come onto the Bitcoin network. They buy in right at the worst time, and they tend to buy right around the all-time high or as it's dropping down in price. So we're going to go over the numbers and we're going to see what this can tell us. Okay, so we're just going to start quickly with this first market cycle. This is all the way back here in 2011. This is a vastly different market, right? The market was much smaller back then. There weren't nearly as many participants in the network. The price was much easier to move up and it was much easier for it to fall a huge amount. Now, with that said, the price fell around 93%, right? So that's even more severe than some of the other price falls that we've seen in the subsequent market cycles, where we've seen price falls of around 80 to 85%. So specifically what I want to focus on here, because even though the market cycle was way different back in the first cycle, there are a lot of characteristics of this cycle which played out very similar to what we've seen in the subsequent cycles. So in terms of how long this cycle lasted, you can see here that it actually only lasted around 488 days when we're using the measurement technique that we're using, which is a bottom to the next bottom after making an all-time high. Okay, so after going on a parabolic bull run into an extended bear market. And in this case, when we say extended, we're not talking about a significant amount of time, because the bear market only lasted about 157 days before it started trending back up again. So the first thing to point out is the price during this time. The average price of Bitcoin during this time was around $4.09. Okay. Now, where was our all-time high at? Well, you'll see that our all-time high actually ended up right around here, right at around $30. So if we measure that move from this average price up to this all-time high, it was about 650% above where the average price for that cycle. And now, if we just look at the percentiles, notice that, if we think about what a percentile is, we're talking about, just putting out each individual price and looking at the number of days that the price was at or below this number. Okay. So you could think of this as a histogram, for instance. So at 23 cents or below, about 25% of the days were spent below that price. And even at the 50th percentile back in this cycle, the 50% of the days were spent below 89 cents. Okay. So that's even significantly below the average price. And if we just, measure how far above the price got from the 50th percentile, we got around 3,300% above that 50th percentile. And even the 75th percentile was only at $5.59. So that's still, if you just didn't buy in right at the peak or right around the peak, you were still up multiple hundreds of percent. So around 400%. All right. And, the reason that I'm pointing this out is because the vast majority of retail market participants do not buy in at these levels. They're buying in at around the 90th percentile or the 80th percentile. So they are getting in much closer to the peak, or they're getting in on the way down because of the buy the dip mentality. And, it's a bit harder to see in this cycle, but I think we'll be able to see that much more clearly in the subsequent cycles. So the following cycle was this much longer cycle. We're talking about 2012 basically through 2015 here. So during that time, this cycle lasted around 1,150 days. And the average price at this time was around $227. Now recall that the all-time high price during this cycle got all the way up to around $1,200. Okay. So again, we're talking about a huge amount below the average price, was a huge amount below where the all-time high price occurred. So we're talking, around 425% or so. Okay. So, if we look at then the distribution of prices during this cycle, it's kind of the same thing that we always see. So what happens in these cycles? When we're in a bear market, the retail market forgets about investing in the asset. Now remember, we just came off of this first cycle bull market back in 2011, and now we're down here. The price went from $30 down to $6, all the way through around $13. And now remember, the price from this $13 level is going to go up to around $1,200. So almost a 10,000% gain. And if we look at the distribution of these prices, we spent 50% of the days, about 50% of the days below $106. Okay. And even if you go up to the 75th percentile in this cycle where the price got up to $1,200, it was only $440. All right. But even in this cycle, the majority of the time was spent below, significantly below this all-time high price, which was $1,200. And you have to imagine that, considering that we're looking at this distribution from all the way back here in 2011 through all the way here in 2015, a huge number of these days that are falling below this 75th percentile, where are those coming from? And they're coming from this segment of the bear market here, right? Because you probably had, if we just look at the amount of time that the price stayed below that, $440 75th percentile range, there's about 100, over 100 days here. All right. And, basically after the parabolic run started, you had a few days to get in, maybe about a month. And then the majority of people, though, got in up at these levels. All right. So then they're stuck with the bag as the price is crashing on them. Okay. And then that sends us into the next market. And now we're starting to get into the bull markets where, it's much more likely that people are, more aware of what's going on in this cycle. The 2018 cycle, I think everyone kind of knows how this cycle played out, where we had this extended bear market. We had this extended bear market that basically lasted all the way, you can say that it started at the end of December of 2013. And it really, we didn't get back to a new all-time high again until 2017. So you had a legitimate, until we got back to the all-time high, you had a legitimate almost 1,200 days. But even during that time, you had numerous 30 to 40 to 50% corrections. All right. And so these are just shaking out people in the more bearish stage of the market. If you want to consider this a bearish stage of the market, in reality, when we look at what the price did, the price went up around 600% during that time. Okay. But nonetheless, a good majority of the people that were in the market and that ended up not selling the asset, they were holding somewhere during this range right here, right? So they were at a huge loss. So if we just look how far the price came down during this time, it was around 86%. And even if you say that, the average retail person bought somewhere in this range, they were still down around 80%. Okay. So, we come into the 2015, into the 2016, into the 2017 cycle, and the price just goes absolutely insane. And now this is the first cycle where you truly had the retail FOMO stage. And it just is perfectly demonstrated with the on-chain metrics. And we've went over these a million times, so I'm not going to go over them again in this video. But we essentially saw during this stage of the market cycle right here, we saw that the number of active addresses on the Bitcoin network essentially doubled within 2 or 3 months. So it went from around 600,000 rapidly up to over 1.2 million daily active addresses just from the end of September into October. So there was just a massive influx of individuals into the market during this time. And we actually see that where did the majority of the individuals, or, what were the highest points in terms of network activity? They were actually in this zone right here. So people were FOMOing in, listening to people on YouTube, on Twitter, on Reddit saying, buy the dip. It's just another dip because... And to a certain degree, can you really blame them? Because let's take a look here. We have 1, 2, 3, 4, realistically 5 and perhaps six times within the last year to year and a half, where these people had seen the price do a correction just like this one. Too many people came in too short of amount of time. It led to a bubble burst like we always see at the end of these market cycles. So ultimately then, when people talk about this cycle, they say 20K and they say, all the way down here to 3,500 or around 3,000. And to an extent, they're right when they're talking about the market cycle bottom, because the average price in this cycle was $3,075. So if you go from this bottom down to this bottom at the end of 2018, the average price was $3,075. Okay, now during this cycle, well, when we look at the percentiles, again, it's the same thing. Let's take a look at the price at which 50% of the days fell underneath. All right, and that is $895. So that's going to put us right around here. Okay, and the price then went up around 2,075% from that average price. If you're looking at the number of days in this market cycle, okay, not the average price, but rather the 50th percentile price. So again, where is the retail market sort of dormant? They're out of the cycle. They're not thinking about Bitcoin because it's not on the news. They just got burned in the last cycle, so they've kind of forgot about it and they don't want anything to do with it anymore. It's exactly at the wrong time, just like we're seeing now. I mean, you can just look at YouTube channels right now during the bear market compared to the bull market. They're dead. All of them are dead. The views may still be there because there's still a lot of people who have stuck around, but there's no new people coming in. People are scared to invest in these times because what's happening, the price, it's trending down, and people are scared that, they don't know where the bottom is, and therefore they're going to kind of wait, or they're just going to get out of the market and not be a participant anymore. All right. And, what we're seeing is, like we've seen in every single cycle, that ends up being a mistake. And so, that brings us to this cycle. And it's the same exact thing. I'm not going to beat a dead horse here, but what we see in this cycle is that we're kind of the same thing is playing out like has played out in every other cycle. But you have to remember that we've only come this far right now. We don't know where that market cycle bottom was. And so far we've been around 1,300 days through the cycle. So if we look at the average price, that's at around $24,145. So that's around, almost 200% below the all-time high. But if we look at the 50th and the 25th percentile, the 50th percentile is down here at around 11K, so about right here. And, compared to the all-time high, that's still 500% below that all-time high. So even if you include all the days of the bull market, even if you include all the days of this bear market that we've been in now following hitting 69K in November, 50% of the days in this cycle afforded you the opportunity to buy Bitcoin at $11,767 or better. Okay. Or better. And, when we really look at this, we have how many days where the price was down here at 3K, 4K? How many days was it trading down in this range at 7K all the way down to, 4.5K? How many days was it at 10K or below? And ultimately, that's almost the majority of the days. The majority of the days of this cycle, the price was vastly lower than what we're even at right now. Even right now, when the price of Bitcoin, and if we just measure this here, we are down currently around, from our all-time high, we're down around 70% or so. Okay, that's not exact, but more or less we're down 70%. The 50th percentile in terms of the price for this market cycle alone, even right now, as we're down 70%, is still, we are around 80% above that. Okay. And we're down 70% from the all-time high right now. So the whole point I'm trying to make here is, if you are, first of all, I'm not giving financial advice. This is how I view the market. I don't want anyone to get mad because, they think that the price is going down to 10K or 8K or whatever. And it very well may. But the point is that if you believe that there will ever be another bull run, and if you believe Bitcoin will still be the preeminent cryptocurrency asset, which I tend to hold that belief, I'll entertain arguments to the contrary, but I do believe that Bitcoin is going to remain the number one asset by market cap. And I do believe that, it will recover from where we're at right now, just as we've seen it recover in each prior market cycle. All right. Now, the point of what I'm getting at here is the fact that, if you hold those beliefs, then, even if the price does go down from here, even if you were buying at 6K and then it went down to 3,500, well, at the end of the day, you took a hit in the short term. You certainly took a hit, and you basically took a hit for around a half a year, around 175 days, right? You took that hit during that time where you were down significantly. If you bought right before this crash here, you were still down 50%. If you waited a year, if you waited 2 years, then you were going to be up, from this plateau right here up to our all-time high. At one point, you were almost up 1,000%. All right, and realistically, if you go actually to the high, you were up 1,000%. So that's kind of what I'm getting at here, guys, is that you have to keep it in perspective. These prices that occur at these all-time highs, up here at 50K, 60K, those are not the value of Bitcoin. Those are not related to the value of Bitcoin. Those are speculative investors, investor tourists coming in, trying to make a quick buck. They're in and they're out. They have nothing to do with this asset class. They're not here as long-term investors. They don't believe in the asset, et cetera, et cetera. And they come in, they drive the price up for a very few number of days. And we have all the evidence that you need right here in each cycle to show you that those, the vast majority of the days occur at prices that are significantly below these all-time high prices. So, this is just something to keep in perspective. And the last thing I want to show you is this. Notice where these market cycle bottoms occur. And, they tend to occur right at around the average price. In past cycles, we've seen that the bottom has occurred, especially the cycles that are, somewhat more related to the asset now than they were back then. We've seen that the bottom has actually occurred very close to what the average price for that cycle was. So, the average price in this cycle was 227, and the bottom actually hit right at around 175. Then if you come over to this cycle here, the bottom and the average price were almost identical, all right? And so what you can see now is the average price is 24K, and we're down here at around 20K with a low of 17K. So this doesn't mean that we're at the bottom. And I've said many times on the channel that if economic circumstances change, Bitcoin has never experienced a true recession or bear market in the broader economy. So if economic circumstances change, you could see that Bitcoin now reacts differently. All right. So this is just more data to collect. It's, additional information to take note of, and it does look like the economic circumstances have changed, but we need to see how severe it gets. If our circumstances remain tenuous, then you're going to see that it's very likely that there's more downside from where we're at right now. I know I'm not giving you any definitives here, but I think only a fool would be giving you definitives right now. I don't think anyone can say definitively that this was the bottom or was not the bottom right now. So it's all about, understanding the markets, understanding where we've been in the past and where we may be going in the future based on those events. And what I'm seeing now is where we're at right now is, from my perspective, a buying opportunity. So that's going to be it for this one, guys. Until next time, as usual, see you.